Hello everyone. Welcome to the Stock Minds web channel. Uber Technologies, NYSE Uber, has emerged as a standout performer in the tech sector, showcasing robust financial results and strategic expansions in Q1 2025. With a diversified portfolio encompassing ride-hailing, food delivery, freight, and emerging ventures like autonomous vehicles and international train services, Uber is redefining urban mobility. In this video, we will dive into Uber recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Uber Technologies. Founded in 2009 by Garrett Camp and Travis Kalanick, Uber Technologies revolutionized the transportation industry by launching a mobile app that connects riders with drivers, effectively creating the modern ride-hailing model. Headquartered in San Francisco, California, the company has since diversified its operations far beyond ride-hailing. Uber now offers a range of services, including food and grocery delivery through Uber Eats, freight logistics connecting shippers with carriers, and advanced technologies such as autonomous vehicles and aerial transport solutions. As of May 2025, Uber operates in over 70 countries and serves millions of users worldwide, cementing its position as a global leader in mobility and delivery services. Uber financial performance. Uber's Q1 2025 earnings report showcased significant growth across key financial metrics, reflecting the company's strong operational momentum. Revenue for the quarter reached $11.53 billion, representing a 13.84% increase from $10.13 billion in Q1 2024. Earnings per share, EPS, came in at 83 cents, marking a remarkable turnaround from a loss of 32 cents in the same quarter last year, a 359.38% improvement. On a trailing 12-month TTM basis, revenue rose 17.6% year-over-year from $38.59 billion to $45.38 billion, while EPS surged an impressive 809.23% to $5.66 from 62 cents. Free cash flow per share also showed strong growth, increasing by 81.82% to $3.60 from $1.98. Uber's profitability metrics further underscore its solid financial standing, with a gross profit margin of 33.59%, a net profit margin of 27.07%, and a free cash flow margin of 17.16%. The company posted a return on assets of 5.21% and a notably high return on equity of 69.38%, supported by a prudent debt-to-equity ratio of 0.49. Over the past 5 years, Uber has been growing its revenue at a 39.2% CAGR. Net income became positive in 2023 and has been growing rapidly, while free cash flow turned positive in 2022 and is also growing rapidly. Uber 2025 financial forecast. Looking ahead, analysts forecast Uber's 2025 revenue to reach $50.56 billion, a 14.96% increase from 2024's $43.97 billion. However, EPS is expected to decline by 37.76% to $2.84 from $4.56 because there was a $6.4 billion benefit from a tax valuation release, which may not happen in 2025. Despite this projected dip in earnings, analysts maintain a bullish outlook, setting a consensus price target of $98.19 with strong buy rating, implying an 11.58% upside from current levels. Uber stock price performance and valuation. At the time this video was created, Uber stock was trading at $88. Over the past year, the stock has gained 34.3%, significantly outperforming the S&P 500's 10% increase. Looking at a longer horizon, Uber's 5-year growth stands at an outstanding 152.6%. Also outpacing the S&P 500's 97.3% rise during the same period. Despite these strong gains, valuation metrics suggest that Uber remains attractively priced. The company's trailing 12-month price-to-sales (PS) ratio is 4.1 with a forward PS of 3.67. Its price-to-earnings (PE) ratio on a TTM basis is 15.66, while the forward PE stands at 31.24. Additionally, Uber's price-to-free cash flow (PFCF) ratio is 23.64. If we look at the valuation from 2023 until now, Uber's forward PE ratio is trading below the average of 52.67, as is its price-to-free cash flow ratio. These valuation figures indicate that, despite the recent appreciation in share price, Uber's stock still offers compelling value, particularly given its strong growth trajectory and leadership in multiple high-potential markets. Uber growth potential. Uber's growth prospects are underpinned by several factors. 1. User base and engagement acceleration. Uber's Q1 2025 results demonstrate significant momentum in user acquisition and engagement across its platform ecosystem. Monthly active platform consumers (MAPC) grew 14% year-over-year to 170 million users, representing a substantial expansion of the company's addressable user base. This growth in active users directly correlates with increased platform utilization, as evidenced by the 18% year-over-year increase in total trips to 3 billion during the quarter. The combination of user base expansion and higher engagement rates indicates that Uber's platform continues to capture market share while deepening its relationship with existing customers. The company's ability to increase monthly trips per MAPC by 3% year-over-year, while modest, demonstrates improving user stickiness and platform utility. This metric is particularly significant because it suggests that users are finding increasing value in Uber services, whether through expanded service offerings, improved reliability, or enhanced user experience. The sustained growth in user engagement, combined with the company's expanding geographic footprint, positions Uber for continued organic growth without necessarily requiring aggressive customer acquisition spending. 2. Platform volume and revenue diversification. Gross bookings, a critical indicator of platform activity, reached $42.8 billion in Q1 2025, representing 14% year-over-year growth or 18% growth on a constant currency basis. This performance demonstrates Uber's resilience across different economic conditions and geographic markets, with currency-adjusted growth indicating strong fundamental business momentum. The consistent growth in gross bookings suggests that Uber's platform continues to capture an increasing share of transportation and delivery spending, particularly as consumers shift toward on-demand services. Revenue growth of 14% year-over-year to $11.5 billion, or 17% on a constant currency basis, closely tracks gross bookings performance, indicating stable take rates across the platform. This alignment between booking volume and revenue growth suggests that Uber maintains pricing power while continuing to deliver value to both consumers and service providers on its platform. The company's revenue diversification across mobility, delivery, and freight segments provides multiple growth vectors and reduces dependence on any single market vertical. 3. Autonomous vehicle partnerships and technology investment. Uber's strategic positioning in autonomous vehicle technology represents a significant long-term growth catalyst that could fundamentally transform the company's unit economics and market opportunity. CEO Dara Khosrowshahi noted 5 new autonomous vehicle announcements in just the last week during the Q1 2025 earnings call, highlighting the company's accelerating efforts to integrate self-driving technology into its platform. These partnerships position Uber to potentially reduce driver-related costs while improving service reliability and availability, creating substantial long-term value creation opportunities. The autonomous vehicle initiative aligns with Uber's platform strategy by leveraging its existing network effects and market position to become the primary distribution channel for autonomous mobility services. As autonomous vehicle technology matures and regulatory frameworks develop, Uber's established consumer base, brand recognition, and operational infrastructure provide significant competitive advantages over technology companies without established mobility platforms. This strategic positioning suggests that Uber could capture disproportionate value from the autonomous vehicle transition. Risks to consider. While Uber presents compelling growth opportunities, investors should be aware of potential risks. 1. Intense competition. Uber operates in highly competitive markets for ride-sharing and delivery services, facing rivals like Lyft, Didi Chuxing, Grab, and others. This competition can lead to price wars, increased marketing costs, and pressure on market share and profitability. Uber must continuously innovate and diversify its offerings, such as expanding Uber Eats and investing in autonomous vehicle technology to maintain a competitive edge. 2. Regulatory and legal challenges. Uber faces complex regulatory environments worldwide with varying rules on transportation, labor classification, and data privacy. A major risk is the potential reclassification of drivers from independent contractors to employees, which would increase operating costs and alter Uber's business model. Legal battles and restrictions in different jurisdictions can also hinder expansion and increase expenses. 3. Strategic risks and technological disruption. Uber's long-term success depends on executing its growth strategies and adapting to technological changes. The rise of autonomous vehicles, AV, poses a disruption risk as competitors like Waymo and Tesla invest heavily in AV technology. Uber's reliance on human drivers could become a disadvantage if AV fleets offer lower costs and greater availability. Uber's partnerships with AV companies aim to integrate new technologies while managing investment risks. Conclusion: Uber Technologies has demonstrated impressive financial performance in Q1 2025, with substantial growth in revenue, profitability, and cash flow. The company's strategic initiatives in autonomous vehicles, international expansion, and sustainable transport underscore its commitment to innovation and market leadership. While potential risks exist, Uber's robust business model and growth trajectory make it a compelling investment opportunity. But remember, this is not a financial advice. What do you think about Uber? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.